All right, so today we're going to be talking about something that I think a lot of people don't even know exists,
Right.
even if they are buying and selling shares, which is stamp duty reserve tax,
Yeah.
SDRT. And my tax accountant has actually arranged for us to have this little discussion today
Indeed.
to hopefully clear up any questions about what SDRT is and how it might affect you.
Absolutely. Yeah. A lot of people don't even know that they're paying it a lot of the time. It
Exactly.
just comes out automatically.
Yeah, so let's just jump right in. What is stamp duty reserve tax?
Okay, so stamp duty reserve tax, or SDRT as it's normally called,
Right.
is a tax on the purchase of shares or other securities electronically.
Okay.
Um, this mainly applies to UK companies, although it can apply to shares in foreign companies that have a UK share register.
Right.
So yeah, it's essentially the modern equivalent of stamp duty,
Got it.
which, in the olden days when everything was done by paper,
Yeah.
you would have a physical stamp on a stock transfer form.
Right. Right.
Yeah.
Yeah.
So SDRT was introduced in 1986
Okay.
to cover all of these new electronic systems that were coming in.
Right. So this is like the CREST system.
Exactly, CREST.
Yeah.
That's it. That's the main one.
Okay. So let's talk numbers then. What is the percentage you have to pay for this tax?
Okay, so the standard rate of SDRT is 0.5%
Okay.
of the transaction value.
Right.
And that's rounded down to the nearest penny.
Okay.
So, for example, if you were to buy 10,000 pounds worth of shares,
Right.
the SDRT that you would pay would be 50 pounds.
Okay. 0.5%.
0.5%, exactly.
That's not a huge amount, is it?
No, not on the face of it.
But when you start adding it all up
Exactly.
for the whole country,
For the whole
I
country.
mean, all the transactions that are happening.
Yeah, I mean, in the last tax year, 2023 to 2024,
Right.
HMRC collected 2,295 million in as SDRT.
Wow. That's a lot more than I thought it would be.
Yeah, it's quite a lot.
Yeah.
Although that's actually down 11%
Really?
on the previous year.
Interesting.
Yeah.
So why should people care about SDRT?
Well, anyone who buys and sells shares
Right.
should care about it because
We're probably paying it.
they are probably paying it and it's a cost to them.
Exactly.
So yeah, if you're a casual investor buying and selling a few shares,
Right.
it will affect you if you're a business buying and selling lots of shares.
Yeah. Particularly finance businesses, I imagine.
Particularly finance businesses,
Yeah.
stockbrokers, all this type of thing.
So it's important to be aware of it.
Yeah.
So 2.295 billion is a pretty big chunk of the government's tax take.
It is. Yeah. I mean, it's part of a bigger picture, obviously.
Right.
So all the stamp taxes on shares,
Good.
which include SDRT and the old-fashioned stamp duty,
Okay.
came to about 3.2 billion in the last tax year.
Right.
So it's the biggest part of that.
Got it. So how does it compare to like income tax?
Okay, so it's completely separate from income tax.
Okay.
Income tax is based on your earnings. And the personal allowance for the next tax year is 12,570 pounds.
Right. So anything above that.
Anything above that will be taxed.
Yeah.
At different rates, depending on how much you earn.
Okay.
But SDRT is just a transaction tax, so it's completely separate.
Okay. So it's only on the amount that you're spending on the shares themselves.
Exactly.
And just to give us a little bit more context, how much tax does the government collect in total?
Oh, huge amounts. I mean, in the last tax year, it was 828.9 billion pounds.
Wow. 828.9 billion.
Yeah.
Wow. So SDRT and the stamp taxes on shares are just a tiny little drop in the ocean, really.
Yeah, in the grand scheme of things.
Yeah, that's still a significant amount.
But still a significant amount for the people that have to pay it.
Exactly. And I think a lot of people listening to this will probably be in that category. So,
Yeah.
okay, so now we know how much it is and when it was introduced and all that kind of stuff.
Yeah.
Who is responsible for paying SDRT?
Okay, so normally the buyer of the shares is responsible for paying the tax.
Right. Okay.
There are a few conditions for this. So
Right.
if you are buying shares that are listed on a UK stock exchange,
Okay.
or if you're buying shares in a foreign company that has its register of shareholders in the UK,
Right.
and also the transaction has to be done through an electronic system like CREST.
Okay.
And usually the transaction value has to be over 1,000 pounds.
Okay. So if you're buying and selling shares on your, online brokerage account or whatever,
Yeah.
that's going to be an electronic system.
Exactly. Yeah.
So how does the payment actually work in that kind of situation?
Right. So if the transaction is done through CREST,
Okay.
the payment of SDRT is usually automatic.
Okay.
So CREST will calculate how much is due,
Right.
take it from the proceeds of the sale, and then they will pay it over to HMRC within 14 days of the transaction.
Okay, so it's all done for you, basically.
Yeah, it's all done for you.
Yeah, so you don't really need to worry about it.
Yeah, unless you're doing an off-market deal.
So what is an off-market deal and how does that work?
Right. So if you're buying shares off-market,
Okay,
then you'll have to notify HMRC yourself,
right.
and you'll also have to pay the SDRT yourself.
Okay, and what's the deadline for that?
14 days.
14 days, so same as the Crest one.
Same as the Crest one, yeah.
Okay, and what happens if you miss that 14-day deadline?
You can get charged interest
Oh, really?
on the unpaid tax, and you could also get a penalty.
Okay, so don't miss that deadline.
Don't miss the deadline.
Right, and I guess the best thing to do is if you are doing an off-market deal,
Yeah.
is to speak to an accountant.
Exactly.
Yeah. Okay, so let's talk about the difference between SDRT and the old-fashioned
Yeah.
stamp duty.
Okay.
Tell me, what's the difference, really?
So the difference is all to do with the method of transfer.
Okay.
So as we've been talking about, SDRT is
Yeah.
all about electronic transfers,
Yeah.
paperless transfers,
Right.
whereas stamp duty is all about the old-fashioned way of doing things.
Right, with a physical piece of paper.
With a physical piece of paper, exactly a stock transfer form,
Okay.
which you would have to sign and stamp
Yeah.
and all this kind of stuff.
Okay, and is the actual tax rate the same for both?
The tax rate is the same, yeah, 0.5%.
Okay.
But there's a difference in the way that it's rounded.
Right.
So SDRT is rounded down to the nearest penny,
Right.
but stamp duty is rounded up to the nearest 5 pounds.
Okay, interesting.
Yeah, so there's a slight difference there.
Okay, so how much revenue did the government get from the old-fashioned stamp duty then?
Okay, so in 2023 to 2024, they collected $905 million
Okay.
in stamp duty.
So significantly less than the SDRT.
Significantly less, yeah. And actually, it's down 24% on the previous year.
Wow. So does that tell us anything?
Well, it tells us that most share trading these days is done electronically.
Yeah, exactly.
Very few people are still using
Paper forms.
the stop transfer forms. Yeah.
Yeah. Okay, so just to clarify, the total amount for all stamp taxes on shares,
Yeah.
including both SDRT and the old-fashioned one.
Yeah. So in the tax year 2023 to 2024, it was $3.2 billion,
Okay.
which is actually down 15% on the previous year.
Okay. So let's just break down those figures again so everybody's got it very clear in their minds.
Okay.
SDRT was how much?
SDRT was $2.295 billion.
Okay, down
Down 11%.
11%, and the old-fashioned stamp duty.
$905 million.
Okay, down
24%.
Right. And so the total for all stamp taxes on shares,
$3.2 billion.
down 15%.
Down 15%.
Wow. And just out of interest, how does that compare to stamp duty land tax?
So stamp duty land tax is a completely different ballgame.
Yeah.
It's the tax that you pay when you buy a property.
Right.
And that raised $11.5 billion in the same tax year.
Wow. Okay, so a lot more
A lot more, yeah.
than shares.
Much bigger market.
Yeah.
Okay.
And so why are we seeing these decreases across all these different types of stamp duty?
Well, it's generally thought to be because there are fewer transactions happening.
Right.
And that's probably down to economic factors.
Right. I mean, the last few years have been
Yeah, it's been a bit of a roller coaster.
a bit crazy. Yeah. Okay, so
Yeah.
why should our listeners care about SDRT?
Well, as I mentioned before, even though it's only 0.5%,
Yeah.
it's applied to every transaction.
Right.
So if you're regularly buying and selling shares,
Yeah.
those costs can add up.
Exactly.
Like, if you're buying a huge portfolio of shares,
Yeah.
that 0.5% can be quite a significant amount of money.
Right.
So yeah, it's important to be aware of it and to factor it into your costs.
And for businesses as well, I imagine.
Yeah, for businesses, it's even more important.
Yeah.
Because they're going to be doing much bigger transactions.
Exactly.
Potentially more frequent transactions.
Yeah, so that 0.5% is really going to add up.
Yeah, it's going to eat into their profits.
Exactly.
So yeah, it's really important for businesses to be aware of SDRT.
Okay, so final thought for our listeners.
Final thought for our listeners.
If you're buying and selling shares,
Yeah.
be aware of SDRT.
Yeah. Don't forget about it.
It's there, even if you can't see it.
Even if you can't see it,
Yeah, and it's going to cost you money.
it's going to cost you money.
So factor it into your calculations.
Exactly.
Excellent.
Right.
Okay, so to sum up, stamp duty reserve tax
Yes.
is a 0.5% tax on electronic share purchases in the UK.
That's right.
You are usually responsible for paying it if you buy shares.
Yeah.
But
Yes.
the way that it's paid depends on how the trade is conducted.
Exactly.
So if it's done through Crest,
Yeah.
the payment's automatic.
Yeah.
But if it's an off-market deal,
Then you'll have to do it yourself.
yeah, you'll have to sort it out yourself and make sure you meet those deadlines.
Yeah. And if you're not sure about anything,
Yeah,
talk to an accountant.
exactly. Talk to the experts in my tax account. We want to thank them very much for arranging this
Indeed.
little chat today.
Thank you to them.
And yeah, hopefully that's cleared up a few things for our listeners.
Absolutely.
And Yeah. We'll see you next time.
See you next time. Thanks for listening. Bye.